In this video, I'll discuss Q1 FY26 result of L&T Finance, Vintage Coffee and 361. So let's start with L&T Finance. In this quarter, L&T Finance grew their retail book by 18% year on year to 1 lakh crore AUM. But if we look at the growth, 18% growth is like little below average. Okay. In terms of the disbursement, they grew their retail disbursement by 18%. So if we compare it to Poonawalla, if we compare it to Capri Global, so Poonawalla is growing at 50%, Capri Global is growing at 45%. If we go to the affordable housing finance segment, India Shelter is growing at 35%, Home First Finance is growing at 30%. So the thing is that why I would choose L&T Finance over Poonawalla FinCorp or Capri Global or India Shelter. There is no reason that I would choose L&T Finance because 18% growth is below average versus other company. So there is many company who are growing at 25-30% and over 30% also there is many more companies. So that is the thing with L&T Finance. Their asset quality remains stable. So there is no improvement or there is no deterioration. Asset quality in terms of GNPA, NNPA, in terms of 1 plus DPD, 30 plus DPD, all remains in the range. Okay, so that is the thing. And in terms of their revenue growth, revenue also grew by 13%. NIMs grew by just 2%. That is another negative point, that there is hardly any growth in terms of the net interest margin. So that is the thing. In terms of their PAT also, PAT grew by 2%. So if we look at the whole result of L&T Finance, it is nothing. Then if we compare it to Poonawalla FinCorp also, Poonawalla is trading around what, 4x price to book. L&T Finance is trading at what, 2x price to book. But the thing is, why Poonawalla is getting better valuation? Because Poonawalla is growing at higher pace. So that is the point we have to see, that we cannot say that L&T Finance is cheap because it is trading around 2x PB ratio. I think even if it is trading around 50% PB ratio than Poonawalla, then also it is overvalued because what? Because their growth rate is pretty low. Okay, Poonawalla have like, if I am not wrong, they have 50,000 crore kind of loan book. Okay, still they are growing around what, 50% year on year. So that is the thing with L&T Finance. I do not think I would anyway look to invest in this kind of companies who do not have any kind of growth. So that is the thing with L&T Finance. So let's talk about Vintage Coffee. Vintage Coffee continues to grow at a higher pace. They grew their revenue by 130% year on year in this quarter, and it is expected that they are going to register a revenue of 105 to 110 crore because in the last quarter and in their investor presentation they mentioned that they booked the orders for Q1, and in the Q4 they are already running at 100% capacity utilization. So that is why it is pretty obvious that the revenue will be in the range of like 100 crore. Okay, and in this quarter they registered a revenue of 102 crore. In the last video of Vintage Coffee, I also mentioned about that revenue should be in the range of this kind of 100 to 110, 120 in next few quarters, because if we look at their capacity, they have 6,500 MTPA capacity for now, and they are going to open another capacity of 4500 MTPA by the end of FY26. So till FY26 there will be no capacity addition. So that is why there will be no gain in terms of the revenue quarter on quarter, because why, already they are running at 100%. So except they add any kind of capacity, they will not able to grow their revenue. So that is the point we have to look at in the next quarters, in the Q2, Q3, even Q4 also. So we have to see that when the next capacity comes, okay, next capacity of 4500 MTPA. So that is the thing. And they also announced another 5000 MTPA capacity. They did not announce the date or any kind of timeline, but after that 4500 MTPA capacity, they are going to work on another 5000 MTPA capacity. Okay, so that is the point. So in terms of the capacity expansion, they are working very good, very well, but we have to see, we do not we have to see the demand side also, because we can add capacity but demand should match the capacity. After matching of demand, after the matching of demand, a company can grow. Without the demand, company can't grow, because there is a ample example, ample companies who expanded their capacity but their demand never comes back to the level of that. So that is why we have to be very cautious that how the demand grows in the future, because if the demand does not capture if the demand does not catch up to the capacity, there is no benefit of the capacity expansion. So that is what we have to see in the future also, that how the demand catch ups the capacity utilization. Till that they are doing very well in terms of the demand, in terms of the capacity utilization. So that is the thing with Vintage Coffee. So also in the PAT also, they grew their PAT by 200% in this quarter, and they are consistently growing their PAT at 180, 90, 200%. So that is a thing, Vintage Coffee is doing very well. And if we see the revenue growth, that is at 130%, whereas the PAT growth is over 200%. So they are getting constant operating leverage. In the last few quarters, they are constantly getting operating leverage. So that is a really good thing, that their margin is expanding quarter after quarter, quarter after quarter. PAT margin improved PAT margin improved year on year, but it is stable at quarter on quarter basis. But yeah, they are expanding their margins very well. So that is the thing with Vintage Coffee. And if we look at the valuations also, I think they are trading around 40x, 45x kind of PE. So in terms of valuations also, I think they are trading at a good kind of valuations. I think this is more or less fair valuation, because it is a B2B company. Yeah, they opened a B2C company, B2C segment also, but it is pretty low in terms of the revenue generations. So that is the thing with Vintage Coffee. So this company is going in a right direction, I can say. So that is the thing with Vintage Coffee. Okay, so let's talk about 360 ONE. So if we talk about the capital market, all the capital market companies have similar kind of problem, that their brokerage revenue decreasing quarter on quarter, year on year. So that is the problem everyone is facing, and 360 ONE also facing the same kind of a problem of decrease in brokerage revenue. Okay, because in this quarter their brokerage revenue decreased by 30%. So that is a really bad thing, that a good a segment which is contributing very well to the revenue. I mean, that is what I think that is 25-30% contribution to the revenue, but it is decreasing year on year, so that is a really bad thing. If we look at other capital market companies also, they are facing similar kind of problem, and we have to wait till when the numbers will stabilize. Okay, so that is the thing with brokerage revenue. But in terms of the wealth management business, they are going really well. They grew their wealth management AUM by 27%. Okay, so in terms of the AUM growth, they are doing really well. If we compare it to Anand Rathi also have a similar kind of AUM growth in the range of 27-28%. So in terms of revenue, in terms of AUM growth in wealth management business and their mutual fund and asset management business, they are growing their AUM at a decent pace. Okay, their annual recurring revenue grew by 36% in this quarter, which is a really good kind of growth. But overall revenue grew by just 10% because of the brokerage revenue that degrew by 33% in this quarter. So that is the thing every company is facing. So in the Angel One con call also, the company management said that we are expecting it to normalize by Q4 FY26. So we have to track the numbers. In Angel One numbers also, they grew a little bit quarter on quarter, more or less, but that was more or less flat. In 361 also, their brokerage revenue grew just 1%, which is like a flat number quarter on quarter. But the good thing is the fall in brokerage revenue stopped in the last quarter, because their brokerage revenue was at what, was over 200. Okay, was over 200 in Q3, I think Q3, if I am not wrong. In Q3 their brokerage revenue was at 200 crore. Then it came down to 150 level in Q4 FY25. Now the revenue is at 152. So that is the thing with 361. So if we compare it to Anand Rathi or Nuvama Wealth, I think to me Nuvama Wealth is the best company in this segment. Still we are waiting for the Nuvama's result, but if we compare it to Q4 FY25, I think Nuvama is the best company in this segment. Anand Rathi is the second best, and then it is 361. Okay, so that is the point. But if we look at the sector, of wealth management, capital market, this segment or this industry have a good kind of tailwind behind them in the long term. Short term, they are facing some kind of tailwind, and that is why we have to actively manage our positions in this kind of companies. And any kind of company, we have to manage our position according to the condition of the market. So for now the capital market stocks are not doing well, so we have to be very very selective that where we should invest our money. So that is the thing with 361 and the capital market. So that is the thing. So that's it for the video. Thanks for watching.